Supreme's very own. Alright, I don't know why I did this, but yeah, it's Supreme's very own at the Supreme HQ. It's your boy Vusimax, the one and only. On today's video, I want to tell you guys what you should do and how you should do it if you want to see your account tripling, doubling, or if you want positive results overall. This is what you should do this week. All right, so before we even get started with today's video, I want to thank everybody for tuning in, watching this video. Before we even go ahead, smash the subscribe button if you haven't subscribed already, because why not? Join the team, join the money team, baby. We're all about the bag, not the pips. I mean, the pips are good, but we want the bag. All right, I'm gonna give you like 5 tips, which is like basically the summary of what I want you to do if you want to see those positive results coming into your account. So, and this is what you should start implementing today. So I want you to start implementing this today and see if your results are still the same at the end of the week. All right, so I'm gonna stop beating around the bush and let's get right into the juicy stuff. All right, so the first tip is I want you to have a watch list. All right, it's important to have a watch list in forex trading, because a lot of mistakes that people make is they treat this as a hobby. You know what I mean? They do something only when they feel like it. They follow a specific way of trading only when they feel like it, and once that particular person is demotivated or has made a couple of losses, which is inevitable in this market, or let me rather say in this game, it's inevitable to not make a loss if you're gonna like want to pursue trading as something that's gonna make money for you. So once you start taking forex serious, like, it's important to do the stuff that you do consistently. So this, in another way to just simplify what I'm saying now, is I like to tell my students that I'm teaching you how to run a business, not how to make forex a hobby or something like that. Yeah, but it makes sense. All right, guys, so what I want you to do is you need to have a watch list. You need to plan before the week starts, meaning you need to look for, if you are a trend trader, a fundamental trader, or a indicator trader. I don't know how indicator traders work, but if you are a fundamental trader, you need to look at all these fundamentals before the week starts, so you're in the right frame of mind when the week starts. You already know what's coming. And if you are a technical trader or a price action trader, which is us, I like to look for trends and look for the market where I'm gonna look for setups during the week once the market is open, right? So it's important to have a watch list. And one key thing to having an effective watch list is you need to make sure your watch list doesn't have too many currency pairs, because you're only human. You won't be able to keep up with a list or a watch list of 20 currency pairs or whatever during your day-to-day activities. So I like to keep it at like 5 maximum for the day, so that I know I can keep up with those specific pairs at any time. All right, so the second thing I want you to pay attention to, or the second thing I want you to do, is you need to focus on a specific setup that you trade. So going back to what we said in the previous point, when we said that you can't treat this like a hobby, you need to treat it like a business. Meaning, once you learn the ins and outs of a strategy, you need to know how, or know the steps of how you're gonna follow through once you see that particular setup. So an example would be like, someone would see, there are traders that, like, when they see a specific setup, to them it looks juicy. So this time, because this setup looks juicy now, they'll open a trade, but they'll have a bigger lot size, which is the first mistake. They'll have a bigger lot size. They'll not put a stop loss, which is the second mistake, because to them they already see that setup going so well, and they already see themselves coming through with a new M4. So they forget about the SL and the TP and all the stuff like that, which they do on all the other trades that, you know, that don't get them so excited. So you need to have a consistent mindset, in the sense that whatever setup that you want to trade, you need to trade it how you always trade those setups, right? The third thing is, I want you to focus on the structure of the charts. So this has more to do with the price action traders and technical traders, which the supreme traders is what we practice. We are price action and technical traders. So with the structure, we look at the highs and lows of a chart. So with the highs and the lows, sometimes the highs and lows are too tight. They are too packed in the, I won't say packed. Sometimes the highs and lows are too tight together. So like there'll be so many highs and lows with like in a relatively small amount of time. So once you know, and there's sometimes when the highs and lows are a bit stretched out, where there's an opportunity to actually enter a trade and hold it before we get the next high or the next low, depending on whether you're selling or you're buying. So you need to be aware of the structure, and you need to, just because the structure is giving you all the signs of a potential good trade, you need to also focus on the structure that is at hand. Like, look at the structure. If the structure there is a bit confusing in terms of you identifying the highs and the lows, then you probably shouldn't be trading that structure, because it's gonna be hard for you to look at what's going on. It's gonna be hard for you to react to the market, because the market isn't even showing you clear highs and clear lows. So the fourth thing I want to talk about is the time frame, right? This point is more to do with the previous point of the structure, in the sense that with the time frame now, you might find that you want to trade USD against the Canadian dollar, USD CAD, but the structure on the 4-hour time frame is a bit tight compared to the structure on the 1-hour time frame. So you will have to adjust to the 1-hour time frame so that you can trade the structure smoothly, and so that you can identify the structure, the highs and lows, with more ease than you would in the H4 time frame, for instance. In short, what I want to say is, once you have the structure, or if you don't have the structure but the trend is showing you all the right signs that this is a trend that's been going on for some time, you don't want to be time frame biased, in the sense that you don't want to say, I only trade the H4 time frame, because you might find that the H1 has a more clearer structure than the H4. And what's important to you as a trader is the correct structure, so that it's easier for you to make money, or it's simpler rather. And the last but not least is, I want you to pay attention to the lot sizing. Your lot sizing should be your lot sizing shouldn't hinder your progress. As in, if you were trading a specific lot size which was effective for your account balance, because I can't say for sure which lot size you should use, because I don't know how your account balance is at, or the size of your account simply. So you need to look at your account balance and scale out what the correct lot size should be, and look at the risk to reward ratio. So it's effective when you have a structure, like when you have a strategy like ours, which has risk management implemented in your entry. So you basically entering the trade at the you're basically entering the trade at a position where it's gonna give you less risk, and it's gonna give you a place where you should put your stop loss, as well as a place where you should put your take profit. And the stop loss is always lower, or it's always smaller than the take profit, meaning we're always risking less to make more. So even when you lose a trade, it's never personal, because you know that once I win, or once I hit a home run, it's gonna cover all those losses and stuff like that. So you need to have a risk management in place of your strategy. And once you have all these things, then you can go to the next thing, which is the group of what you want to trade. Do you want to trade a major? Do you want to trade a minor? An exotic? Do you want to trade a commodity? Do you want to trade all those things? Once you know the value of your account, and you know about all these groups of where you can take your money to work, it's important to know where is it more effective to take my money now for me to get the most return, right? And then from there, you can just spin the cycle and repeat it with consistency, because it's important not to do something just because you're feeling motivated. and just because you just saw this video here, which I want you to give a thumbs up before we continue. Give it a thumbs up, comment, and subscribe if you haven't. I'll greatly appreciate that. And yes, guys, I want you to focus on that consistency. Be consistent with the strategy. Know why you're buying, know why you're selling, and always sell when you see those signs. Always buy when you see those signs. This is more for the price action and technical traders than it would be for the fundamental trader. But essentially, with this position sizing, it's important even for the fundamental trader, because you can't just like risk your whole account just because you're trading fundamentals. So anyways, guys, with what we have said, I wish everybody a successful week. Let's go and triple these accounts, double them, and peace out, guys. I'll see you on the next one. Thanks for watching.